much capital do you need to start trading? What's a practical amount?
In the early 2000s, a practical amount would have probably been 5 to 10,000. These days, the way the brokers are working, you can trade in pennies per pip. So you literally could be risking a few pounds on a trade. So as a result, people can start with £500, £1,000, let's say, let's call it £1,000. It's still a very low amount of money to trade with, but you can start to develop the skill sets. You're not going to make a lot of money on that, on £1,000, because even if you're doing a 20% return, it's not a huge amount of money. But you can at least learn the skill sets of how to trade with a relatively small pot of money these days, yeah.
Would you say that a 10% return every month is a reasonable amount to expect to make off the financial markets?
Well, not every month, because again, it's about imposing your will onto the markets to say, I want to make 10% every month, because it doesn't work that way. The market dictates how much money you're going to make. And I always say it's a bit like buses. They all come at once. And so you will have these rich seams over the course of 12 months. You'll have your rich periods and then you'll have your stagnant periods. And it happens really for most traders that I always say to people, you make your money in 8 out of 12 months, let's say. And the rest of the time, you either maybe having some losing patches or flat patches or whatever it might be. So to impose your will and say 10% every month would be wrong anyway. But even if you said as an average, then yes, it can be achieved. It can, 10% a month. I demonstrated that on the challenge, the 10K to 100K challenge of doing those kinds of returns. But for a lot of traders, they don't want to even make that amount. So it's really dictated as to how much you risk. So if you want to make 10% a month, yes, you can do it. You just have to take on a slightly more risk in order to get to that level. But some traders don't want to take on that risk. They only want to risk a very, very small amount per trade, and they'd be happy making 2 or 3% a month. So it really depends on the individual.
What type of returns do you like to target?
Okay. Returns I'd like to target, I think it's a very dangerous thing to do, because if you say, right, okay, I want to make £1,000 a day, then what you're actually doing is you're imposing a rigid structure into your trading, which sounds like the right thing to do. But what happens if you underperform and you only make £700 in that day or £500? Are you going to think, oh, I've underperformed today? And what happens if you get to £1,000? Do you stop trading because you've reached your target for that day? When actually there were some more opportunities that come along, let's say later in the day, which because you stopped, you missed out on those opportunities. So I think it's good to have a loose target as an average. So let's say £1,000 a day is an average, for argument's sake. So that allows you to not feel despondent if you only make £500 in a day, but at the same time, if you do get to 1,000, you know that you have another trade come along, you can still take it and maybe make 1,500 or 2,000. So I don't have a daily target anymore, and I think it's good to have a loose framework to say, okay, what would be a good as an average? But if you try and be too specific and say, I want to make £100 a day, then you're setting yourself up for disappointment on those days that you don't get it. And the problem that you have when you have those disappointing days, if you react in that way, is that you can carry that baggage over into the next day. So what starts out as just one day, which was a disappointment, that then leads to frustration, potentially revenge trading, going on into the following day, and then you're putting your pressure on yourself. And then what happens is a one-day event actually affects you for the next 2 or 3 days. So you're better off having a loose framework as far as targets are concerned and saying, okay, this is roughly what I would like to be achieving, but I also acknowledge that I can't possibly make that every day. I'm also going to have losing days that I have to incorporate into this as well. And so all I can control is me and my discipline and my approach to taking the right trades at the right time. The overall profits will take care of themselves if I do that.
Do you like to make small and constant gains, or do you prefer the big ones?
Both, I guess. Small and consistent gains is a nice thing to do. And it's easier to do if you're just purely day trading. And so you can just approach the markets on a day-to-day basis, and you can do that. But you're missing out on some of those bigger runs if you're just going for those small trades all of the time. So no, I wouldn't say I favour one over another. Small and consistent is nice for your bread and butter type trading, but your cream, like I talked about earlier on, is your swing trades and those trades that you can build. Not only just get into a trade, but once you're in and it starts moving in your direction, start building the position and adding to that trade, so that it actually can become an exponential. What could be a trade that makes you 2%, which is a great return, could actually be a trade that makes you 4% or 5% if it's the right type of trade and you've been able to build it as it started to move. And those types of trades are more likely only to develop on swing trades than they are on intraday.